Let's consider all the beneficial tax vehicles you can use to boost your savings. It's time to talk about the nitty-gritty of tax-free savings. With the tax year in February fast approaching, it's a good time to consider whether you've maximised all the tax-free retirement vehicles that might apply to you. To start, you can make contributions to a retirement fund which are tax deductible, up to a maximum of R350,000 per annum or 27.5% of your taxable income, I think. Detail. It's not quite tax-free because you'll pay tax in the future when you withdraw from that retirement fund, but it's still a generous saving mechanism which can give you some tax deductions today. Next, let's talk about the real tax-free savings. Let's just quickly break down those words. Savings. Great, that's what we want to have. Tax-free. You'll never be taxed on this money. No personal income tax, no capital gains tax, nothing. Every cent you earn, you're entitled to 100% of it. It's a no-brainer. Again, detail, you can contribute a maximum of R36,000 per tax year to this type of vehicle. You can pay that as a once-off lump sum or make ad hoc or monthly contributions. As we're approaching the end of the tax year, this is an ideal time to max out this contribution as much as you possibly can. Over your entire lifetime, you can contribute a maximum of R500,000. At the current rates, if you're making contributions every year, you'll reach your max in just over 13 years. But don't let that give you an excuse to delay or to skip a year or two. You want to be making your contributions as soon as possible. Why? Well, we all know about the power of compound interest. Even if you don't fully understand how truly magnificent compound interest is, you've at least heard about it enough to know that it's legit. Its true power comes from time. The more time you give it to work, the more you benefit. What's really incredible about tax-free savings is that you're going to pay no tax on any of the growth in that investment. So get invested as soon as possible so that your investment can grow as much as possible and enjoy 100% of that growth, tax-free. Another nice thing about tax-free savings is that you can pretty much invest in anything you want, within reason. While a retirement fund is limited in terms of how much equity or global exposure it has, you have no limits here. If you want to put that full R36,000 in global equity, go for it. If you want it in a local unit trust, just pick one. You can even put it all in a cash account, whatever suits your holistic financial plan. Simply contact your financial planner or any investing platform and say, I want to open a tax-free savings account. They'll help you with the rest. You need to make the most of these tax incentives to boost your savings. One final point. Ideally, your tax-free savings should be the last thing you withdraw from. There's a lot of flexibility with tax-free savings in that you can contribute and withdraw as you please. But when you withdraw, you cannot replace that money. It's not about having a maximum of R500,000 in your tax-free savings. It's about contributing a maximum of R500,000. So, 1. Open an account. 2. Contribute as much as possible to get you as close to the maximum as quickly as possible. And 3. Try to avoid withdrawing from it. Ideally, it should be the last thing you withdraw from. The tax year end is fast approaching, so go on, get moving.